good afternoon, good evening, depending on from where in the world that you're joining us. And thank you for making the time to join Tony and myself today. So today's topic is really about slow payments and quick credit, and it's really meant to be an educational webinar to give you a pulse on what's happening in the economy at the moment. There's a lot of talk about slow payment and payment times, and we're very lucky to have Tony Meredith join us today. He's the General Manager of Commercial Risk at Illion, and Tony has years and years of experience talking about risk, and I'll let Tony kind of introduce himself. First, Tony, over to you.
Yeah, thanks, AJ. So great to be here today with everyone. So at Illion, I look after commercial risk and supply chain. So the great thing about that is, we look at businesses across Australia, New Zealand, and also internationally as well through our D&B partners. And we are an end-to-end business. So I'll go through that in a sec. But what we see is everything from the birth of a business through to the death of a business, so to speak, and all the data in between. So that data we use to help our customers and our partners like EasyCollect to help their end customers make better informed decisions. So, right data at the right time to make the right action. So I've been at Illion 5 years, banking background, but yeah, really excited to be here today.
Thank you, Tony. And as Tony mentioned, we are partners, and I'm the co-founder and CEO of EasyCollect, and our mission is to help businesses eliminate late payment. And that's why this partnership is so important to us, is because to eliminate late payment, having a view on which of your customers are at risk and what is the likelihood of them having problems paying you is critical to solving the problem that we try to solve as a business. I started EasyCollect because I also ran a wholesale manufacturing business, and I had similar problems with cash flow as I grew that business. I felt I was working in the dark. I didn't have access to the data to give me the tools to make better decisions. And EasyCollect really started as a platform to help small and medium businesses to better manage their cash flow, make more informed decisions. And today, we have over 57 staff in 18 countries. And what makes me the most excited is that we see customers emailing us every day saying that they're using EasyCollect to get paid faster. Now, today's not about EasyCollect, it's not about Illion, it's about you, and it's really about sharing with you what's happening today in the economy, give you a pulse. Actually, before the webinar, Tony and I were just talking about the news that came out in the AFR today. Coles was saying that their trade numbers are actually down 30% in terms of their revenue, and I guess it's not a bad thing considering that during the pandemic everyone was buying toilet paper and frozen goods. So, but it's just a sign of times. If sales are going down and Coles one of the biggest, buyers and traders in the market, it's going to affect other businesses, right?
Yeah, 100%. So upstream, downstream risk are always an issue. So particularly for the smaller end of town where you're really excited to get a big Coles contract, you think my business is made. Their business starts slow, which impacts yours. So really, when we go through the data today, we'll pull out a few examples of that where it's not just the industry itself, but what's impacted that industry. And some can be, internal factors, some can be external factors, and we've got some really good examples to go through today. What I'll do just first quickly, so we did talk a bit about the Illion and EasyCollect partnership, and I did touch on this. So, Illion looks at everything from helping our customers from the marketing side. So we give scored leads to businesses. So not just how many plumbers are in South Melbourne, but how many plumbers in South Melbourne pay their bills on time. All the way through to helping onboard, decision those customers. We help monitor through our data. So has there been a change to their business? So change in directors, change in risk over time, all the way through to the collection side. So we work with partners like EasyCollect, et cetera, where we're seeing collection data, we're seeing court action. So what that really helps us do is, as I talked about, everything from the birth of a business all the way through to death, we've got data throughout that. So we do help our customers and partners to be better informed, to make real-time decisions using real-time data. But what we're here today is not to talk about Illion, as AJ talked about. We're here to talk about our quarterly trade payment report that we've delivered. So what we do, so just to go through a bit of methodology here quickly, what Illion does, during every single month, we get the data book or age trial balance of a whole range of businesses. We run it through our analytics and our scoring, our scores that we have. And what we do is provide back up-to-date scores. So what we look at is things what I call below the waterline. So I always talk about the sort of iceberg analogy in terms of you can see a business that's paying you on time, but you can't see how they're paying everyone else. What we can see through the collection of this data is how they pay everyone else. So you could have 1,000 customers, you see 900 are paying on time, you think it's low risk, you're worried about the 100 on that side. But what we can see, which is different, is out of those 900 that pay you on time, have some of them stopped paying everyone else. So should you start being worried? And also for the 100 that aren't paying you on time, are they paying everyone else on time and maybe not you? So maybe there's an operational issue. So we get this data every single month. We put this into a quarterly report where we break it down by things like sector, size, age, location, etc. And that's what we'll be taking you through. So a bit of overview of what's happening in the economy, who's going good, who's going bad, is there any sort of state-based issues or age or size issues across that. The good news for all of us is, roughly 71% of all businesses actually pay their bills on time. So, and that hasn't declined a whole lot during COVID. So, pre-COVID it was 73%, now it's 71%. But there are 29% of businesses which are paying their bills late. So, if I round that up, it's roughly a third of your base will be paying their bills late. And in average for the entire, so all industries, is 11.2 days. So on average, your bills don't get paid on time. How that's actually worked out is, look, if you offer 30 days terms and people pay within 30 days, it's on time. If you offer 60 days and people pay within 60 days, it's still on time. So we don't consider the payment terms that you provide. What we consider is, was it on time? Was it late? If it's late, by how much? What's outstanding? And just that history of that payment. So again, the good news is, look, it's only dropped by 2%, but there will be a third of your base that you need to be concerned about or having a look at. When we look at sort of late payment by sector, there are a few differences here. So, I'll just touch on a few examples. All industries have been impacted. So, it's always hard to see color on Zoom screens, but the purple one, which is the dark one on the left for each of these, is the March 2020. So basically a year ago. It then has December 20 in the middle and then March 21 on the right-hand side. You can see across every single industry, payment times have deteriorated. So everyone has got worse. And if you look at the last quarter, some have gone up and some have gone down. So I'll just touch on two examples there. One is transport. So you think transport logistics, great, everyone's buying stuff online. I'm getting packages delivered, which I don't know I even bought. You think surely they're doing well, but transport has seen a 22% deterioration. So again, when you look at an industry, don't just think, does that industry seem busy? Should they be going okay? It can be upstream and downstream issues. So things like the Coles thing we just talked about. It could be a big logistics company. It could deliver stuff on behalf of Coles. They've sort of, cut down, or they have less of a need. So then it impacts me as a business, or even upstream. So I deliver stuff to a business. They've stopped paying their bills on time, which means I don't get my cash in, which means I can't pay my bills on time. The other example for this is, fisheries or fishing, which you go, who cares about fishing? But you would have heard, a lot of news articles around things like China and the export market, that locking down. For a lot of our fishing industry, it is very much an export market. They export to China for things like Chinese New Year. It's a big time of year. When they haven't been receiving our goods, that whole industry has been impacted. So they've worsened by 35% over that time. So, I guess the news here is all industries have seen an impact, some worse than others, but really you need to sort of dive into those industries to understand a bit more what's going on. And that's the value of this data. When you're getting data on a customer within the construction or transport industry, some will be paying their bills on time, some aren't. And we will show you an example within the EasyCollect platform later on of how you use this data practically. If I just sort of touch on three sectors here, so forestry, agriculture, and the service industry. If you look at forestry, always been a great payer. We all bought a bucket load of toilet paper when we shouldn't during lockdown. There was a mad rush on a whole bunch of things. But we have seen a spike in last quarter. So maybe because that's all we've stopped panic buying. Maybe it could be because of that, but they have seen a spike up. Also, things like forestry. So it's very hard to cut down a tree when you're in a lockdown. I can work from home. I'm lucky. I can be on my laptop, but I can't, there's a lot of industries out there where as we have gone into the lockdown periods and come out again, you can see the impact, because if you can't be physically present for the job, you're not making money, you're not sending out invoices, you're not getting paid. So there have been impacts across all three of these. Forestry and agriculture, sort of no-brainers to a degree. The service industry, which is a whole range of different things, has been pretty flat over the last couple of quarters, but this is what I talk about when I mean sort of industry by industry impacts. You can see, forestry, like I said, that sort of tall paper example. Yes, everyone should be buying like crazy, but we have seen a deterioration. So again, the benefit of getting this data on a regular basis, using it in your decision, in your workflows, or getting sort of monitoring updates is highly valuable, because it does change over time. It's not a static data point. If we look at location by location, so again, this sort of also goes back to what I was talking about in terms of sort of white collar, blue collar to a degree. If you can see sort of Tasmania, Northern Territory, ACT, hiding up some other markets. Our large population centres are based in Sydney and Melbourne. I've heard Melbourne's going to overtake Sydney soon, which I'm sure most Victorians would be happy about, have some bragging rights, but it is largely a white collar workforce. When we went to lockdown, businesses were able to transition to work from home. I know the Easy Collect team do the same, the Alien team do the same. You don't have the big impacts when we've gone in and out. For states which have a large sort of more blue collar workforce, they have been impacted by things like lockdowns, things like export restrictions on fisheries, a whole range of different things. So while all states have got worse, some have suffered more than others purely because of their mix of workforce across this time. And as you can see, the purple line or the dark line is year on year. The orange or the lighter line, depending if you can see the colours, is the quarter on quarter. So there has been roughly a 2% deterioration over the quarter across all states. Tas slightly better than others, but Tas year on year is worse. Largely it's impact for all across all sort of locations. The other cut that we have a look at is sort of size and age. And really, this is quite topical as well. So you hear a lot of things about sort of the big end of town, possibly using the small end of town as a bit of a finance facility. So, I'm a big corporate. I've got a small business that supplies to me. They say they want 60-day terms. I pay them 120-day terms. It can be very hard for a small business to influence that, because often that's my bread and butter. It could be 60% of my revenues from one customer, so it's hard to influence. At the other end, you've got a sort of small on small, which the good thing about this is sort of the micro end is actually one of the fastest payers in market. People may be a bit surprised by that, but if you look at a whole range of technical solutions, so Easy Collect's a great example. Xero, MyOb, the range of payment methodologies you have now. I had an example of a person came and cleaned my couches during the week. I've got a lot of kids, they dirty it up all the time. I get it cleaned on a regular basis. In the past, that guy would have turned up, done the job, gone back, put something into his accounting system, sent me an invoice a couple of weeks later. I would have worked out how on earth I'm going to pay this person. But instead, does the job, gives an invoice via my email, takes payment on the spot, which means he gets his cash flow in faster, which means he can pay his bills faster. So really that micro ends are great payers, and they have benefited from things like technology. Typically, as you get larger, I do a job, I have to go back into my accounting system, I have to get multiple approvals, then it sends an invoice out, it goes to my other big customer who goes through multiple approvals to then get a payment at the other side. Size does impact on that, but the use of technology is helping. On the other side, if we look at things like age, typically everyone thinks of, less than 2 years is very risky. If you've got a business less than 2 years, you apply for a bank loan, there's a lot of hoops to jump through. Have you been in this industry before? Have you taken over a family business? It is harder. What we are seeing is businesses sort of in that 2 to 7 year range typically have been more impacted than sort of longer term businesses or even sort of shorter term businesses. To a degree you think, well, if I've been around 15 years, I've probably got my stuff worked out. I know my business, I've probably got good methodologies for doing things. Not always, but you do see this in this data point. But obviously, as you grow in your business, it's not you get through 2 years and everything's rosy. What we see is typically it's out to that sort of 7-8 period is before sort of, not necessarily insolvencies, but sort of what I call, I go into a business, I think I'm going to work it out. I slug at it for 3-4 years. I work out it's not for me and it's too hard, and I go back to my sort of corporate life. It does take a while for businesses to mature. It does take a while for their processes to mature, but I guess the good thing is, there's great companies out there like Easy Collect providing great technical solutions to help businesses manage the cash flow, get paid faster, etc. And we do see this in our data that we see on a regular basis. Going back to the sort of, who pays who and when, this is very topical. For many of you, you might know there has been a bit of government intervention to make sure big pay small, and we do actually pay on time. There is now sort of registries that we have to, on a semi-annual basis, actually fill out data around. The thing here again is small does pay small the fastest. So that micro end of town, that business-to-business transaction is actually the fastest. Forest Druidge, a bit of a random one, but are the fastest payers in market. As you move up to sort of, small paying big, it does get a bit slower at times. The good thing what we're seeing is our sort of year-on-year data is big paying small is getting better. It is worse than a small paying small, but it is getting better. And that largely is around the push, both at a government level and even an industry level, to go, it's not right that as a big player where I've got a lot of market power, that I use that market power to change, the payment terms. So again, that I know it's 30 days, but you know what? I've got a really bad process. It takes me 60 days to improve it internally. You're just not going to get paid. So we have seen an improvement in times. We have seen things like we talked about Coles before. Coles, Woolies in particular have concerted effort to make sure their small suppliers get paid on time. And you can see in the public administration data, which is basically the public purse, do have the best sort of turnaround times in sort of big paying small. And again, that's largely because there has been a mandate to make sure that government in particular, if you're going to try and force the corporate world to pay faster, you need to live and breathe like that. So you should be doing the same. And we have seen improvement in time of government entities or public purse paying small entities on time. So again, great data. It's always fascinating to see small being the best, but really excited and good for our sort of small businesses out there to see big starting to pay small, because, small business is the lifeblood of the Australian economy. People start out somewhere, just like AJ with this business. You start out with an idea, you're trying to grow that business. The worst thing that can happen is your cash flow gets impacted and that kills your business. So good to see a change in behavior on that. The outtake sort of for this quarter for me is a couple of things. Yes, all businesses are worse year on year. I did touch on roughly 30% of businesses do pay their bills late. So there have been an impact. We haven't seen that get materially worse. There was a 2% uplift this quarter, but what we're looking at is, we haven't seen a massive amount of insolvency. So there's a lot of news and media around everything's going to fall off a cliff. All these businesses are going to go under. It is true that insolvencies are going up, but on a year-on-year basis, we're not back to more sort of what we call sort of normal, normalized levels. So if you look at March last year versus March this year, we're still not at those levels. So we haven't seen businesses drop off. What I'm hearing in
that insolvency, just a question, Tony, could those insolvencies not be going up because of the rules the government had in place last year, where you couldn't you couldn't bankrupt a company with certain value of debts? Could that be, sort of an impact?
Yeah, 100%, AJ. A couple of things. So there's, rule changes like that. There was government support, which is now wound down. So there was a lot of support to keep a business running, to keep them going, to get them through that period. What we're saying to all our customers is, the next quarter is probably critical. So we are seeing a slight increase. We have seen payment terms deteriorate a little bit. We really want to see what happens through that sort of April, May, June, to see, does it actually worsen or not? Because with all the removal of government support, everyone's on their own 2 feet again. So, if you're running a business, you need to build that back up. You need to be finding customers in the door. You need to be managing cash flow effectively. So I think the next quarter is critical. At this stage, we're not seeing, panic stations. Slight deterioration, slight increase in insolvencies, but again, not to sort of historic levels. But we'll be fascinating to see what happens. The other thing, and we're going to go through a great example after this, is what kills a business is cash flow. Can you get it in? Can you get it out? Can you pay your bills on time? What we're also, sort of seeing, and what we look at is, there's things like debtor invoice finance. Great products, help you free up cash flow, but you do pay for it. Often those rates are sort of 12 to 25%. For many businesses, that helps them get through, particularly that sort of early periods, helps them get through periods of growth. But what we don't want to see is, because of inefficient processes, because you're not looking at the data, because you don't understand where you've got risk, you're relying on products, but you're giving margin away when really, you should be looking to optimize your cash flow. So, using great technology like we'll go through, but using the data behind those technologies to also help you make informed decisions. Which of my existing customers is paying me on time, paying everyone else on time? Who can I quick approve for the next loan, for instance, or the next facility? Which of my customers look good to me, but look bad to everyone else? So in terms of stop paying them on time, where should I pull back on limits, change payment terms, maybe be a bit more sort of arduous in my sort of credit approval process? It's really using those data to sort of maximize your cash flow, maximize your revenue. And again, great to use things like invoice and data finance, but use it in the most appropriate way, in the most efficient way. And the last thing, the sort of collections example, if you've got a bunch of customers that owe you money, who do you just need to send a gentle reminder to? So, hey, AJ, you forgot to pay your bill. Can you please get onto it? Rather than a nasty call to AJ saying, mate, you haven't paid my money, what's going on? Because I may have a very inefficient process on my side where really if you've got a sort of people strategy around collections and you can't automate it, get them focused on the higher risk customers, and you can use the data to understand that. So really just in summary, we have seen a deterioration. It hasn't fallen off a cliff. We are largely optimistic about the sort of the next, quarter and next 6 months. We will be having a watching brief. And really our advice to everyone is use data, use automation, use systems to make better informed decisions. So right data, right time, best decision. I'm now going to hand back to AJ.
Okay.
We're just going to run through a bit of a demo here.
So what the demo really is, it's not a demo of EasyCollect. It's really just showing this data that Tony mentioned here, this late payment data. How do you actually use it in your business today? Half the thing is, as an SME, we're all time poor. We don't know how to access the data. We don't know who to talk to, how expensive is it? How do I get this data quickly? Because I don't have time to muck around, right? So what I want to show you is how you can do that today. In just like 4 or 5 minutes, and if you like it, then we can explore that further. But firstly, Tony, thank you very much for that. That was really very, very insightful. The thing I would like to ask you is, you mentioned you had a late payments report. Is that something which we can access for the quarter gone in a bit of detail and share with everyone on the call today?
Yeah, 100%. So we'll be sharing that with the EasyCollect team, so everyone can get a copy of that. This March report will be ready in the next couple of days. So we will send it around, and AJ and I have talked about sort of ongoing basis how we make this a regular thing so we can get these updates to you.
Yes, if you want the report, just use a chat. We can send it to you, and we'll try and get it to everyone on the call as well. So one thing I want to show you now is this. So this is what you're looking at here is the EasyCollect UI, and EasyCollect is a system that's always connected to your accounting system. So if you're using Xero, MyOb, SAP, Pronto, it doesn't matter what you use. You've got a view of your customers on a web-based app here. And most people look at their debtors in terms of risk, in terms of aging. Are they current, meaning that their invoices are not due? How many are 1 to 30 days due? 1 to 30, 60 days, and that's all good. But what Tony was talking about today was how you look at your debtors from not just aging, but the other factors such as what he called below the iceberg factors, the risk of how your customers paying other suppliers, right? So if you click on this Credit Insights tab, what we've done is with the partnership we've got with Illion, we take the data that we have in your accounting system and we combine it with the risk data that Illion has in their bureau on late payment and failure risk to give you a very simple, concise way of where you should focus your AR team's time when it comes to chasing customers. So not just calling the customers that are perhaps the oldest customers, but the ones that are the highest risk. So let's talk about an example here. We have these different groups. You got business as usual. These are customers who Illion deems as fairly low risk, and they also pay you on time. But a good example I like talking about is this thing called a potential relationship issue. So these are customers that, and at the bottom we have a kind of more explanation of what it actually means. But in just saying it in sort of simple English here, is customers that are paying the market on time, so they're paying other suppliers, but for some strange reason they're paying you guys late, right? Now. We've got quite a few messages on chat here, Tony, so I'll let you look at those comments and questions as I'm speaking, but I'll continue sharing my screen here. And so what you have here are customers that Now, why they're paying you late, we've got to drill into that. So if we look at this customer list, this is a live view of your own accounting system. They make up 16% of the balance owing, and they make up 18% of your total customers, right? You can then go and view all those customers in that particular group. When you view those customers, what you can then do is get a nice view, a detailed view by customer, and really break it down. So if you can see, for example, for Watson Group here, the late payment risk here is actually low, which is the risk from the bureau that's saying the likelihood of them paying late. Maybe you can add some color to that.
I mean, really two scores. So late payment risk is just what's the risk of them paying late in the next 12 months, and failure risk is what's the risk of them failing the next 12 months. So nice simple metrics around those based on live data and all our compiled data in there. And as you've shown here, really great example of going late with you, good to everyone else. So is that a process issue? And how you treat that customer can be very different to one of the sort of high risk groups that AJ talked about.
Spot on, right? And you might want to say, hey, this customer, I'm a bit concerned about them. Let me start to add them to monitoring, because you might say, I don't have time to continue to look at it because they seem to be a good customer. Monitoring is a really interesting service provided by Illion, and what you can do as a business, if you're using EasyCollect, you can click this little heart button, and it will start sending you alerts that are relevant to that customer. Now, when I say alerts, Tony, can you talk about what kind of alerts are actually being sent?
A whole range of things. So there can be things like, there's been a director or shareholder change, so there's been change in ownership of the business, a change in risk score, so the late payment or failure risk score has changed or gone adverse. Has been a court action collection notice, so really some adverse activity on that client. So really what it's providing you is, up-to-date changes, which should matter to you. So, you might go, well, why does a director change? Well, if, a business has been sold or the new directors come in, there can be often a bit of, change in how that business performs. So monitoring is giving you sort of up-to-date, in-time changes relevant to you, so you can action those. So rather than go, customer's gone bad over time, what's happened? You'll see what's happened over time. You'll see a change in score. You'll see a court actions happen, so you can take real-time actions.
Yeah, and that's the right point, Tony. What you have is then you can take action. So you might say, you know what, this customer is paying me really late. I'm a bit concerned. You might actually want to go and grab a credit report, which we'll show you in a minute how you can do. So you can actually purchase or get a free report depending on the plan you're with EasyCollect on the customer. I'm really concerned to send this customer to a debt collector or send them to a lawyer, or I might want to maybe send a couple more SMSs to the customer. Of course, that's based on your own relationship with the customer and how you want to do that, but you can actually take action, and everything you do is tracked and managed here. So if you ever do have to escalate to a third party, then it's a lot easier and a lot simpler because all the history of everything is here, all your invoice information is here, all your contact information is here. The other thing which, in partnership with Illion, which is very, very useful, is actually getting a real-time credit score. So you might have a situation where you aren't working with a customer at the moment, but you actually want to, I have to refresh my screen here. You might actually want to get a real-time score on a particular customer, right? I'm just going to refresh my screen because it's probably waiting it. There we are. So you might want to get a real-time score. And again, with a score, if they're already a customer, you can profile them in the screen that we just showed you, but you might want to go and search for any customer. Again, with the partnership with Illion, you can type in a business name and you can get a score on the customer real time, which I think is super valuable. If you're onboarding a brand new customer and you want to sort of check are they a good risk or a bad risk, you can do that in seconds, right? Again, this is the same score we spoke about earlier, but you can see the range from severe to like minimal. This is actually EasyCollect. So, there's a lot of reasons why we're average and low. But again, it is what it is. And this is the data that's in the bureau.
Yeah, 100%. And, like you talked about, AJ, so what goes in a score is a bunch of real-time live data and then also what we call basically historical data. So we track businesses over time and go, for a business of this size, this age, in this industry, in this location, what's the risk? And that's updated continually as our models run through. So really once you get sort of, it's the high, very high severe where you need to be concerned. Moderate's more sort of watching brief in my sort of language. But again, as AJ said, a great way to help improve the onboarding experience, make it faster, make it quicker, do a quick check, know where they're at. And also just touching what you touched on before, AJ, about, the actions around SMS sent to a third party, using that late payment information to go, not paying me on time, but paying everyone else on time, it's really a cost save as well. So SMS is very cheap. Sending to a third party or getting legal action can be very expensive. So you don't want to go down that path if you haven't used the data to make the right decision. Good way to cut down that expense for you.
And you might say, hey, this customer's got in this example, let's say our score is really high in terms of risk. You might want to say, hey, I actually want to get a credit report. Again, built into the app, powered by Ilion, you can view real-time data on any business that you choose, right? And the credit report just goes deeper. So as we go through this, you can see there's company information, court actions. Tony, I'll let you talk through this as I scroll down.
So generally in all reports, what it'll have is who is the business, what do they do? It'll tell you a bit of court, adverse stuff, court action collection notices. It'll tell you revenue turnover. If we don't know it, we'll model it. So what we think it will be for that size. It'll give you the score trends, so how those scores change over time. And then it will typically go through things like, directors' ownership. So what's the shareholding of a business, which, may not be important for all customers, but again, knowing who the parent company is, often what you'll find is you've got a customer base and some of them are linked. So do you actually understand your exposure? So it's actually these 4 companies are the same company and not 4 different companies. So great for that sort of stuff. Directors as well. So what's the director risk? Do you need directors' guarantees? What other things are they attached to? All the way through to a bit more in depth around sort of our trade payment information. So what's outstanding, what's not. So it is very sort of detailed reports, but great to fact check who the business is, what's the risk around the business, should I be worried about anything, who owns them, and who are the directors that sit behind that business.
Yeah, I think it's a fantastic report. And again, you don't have to get it for every customer because there's a cost to the report, but it's there, and especially like PPSR and see cross directorships. It's all there. It's brilliant. So if you want to approve that customer, say, yep, I want to work with them, the final step is how do you onboard the customer? So again, you want to keep it really streamlined, really simple, and have a really good image for your business. So you can, through EasyCollect again, set up a online application form, generate your own personal link, and then within a few seconds, you can actually set up a create application form that you can send to all your customers. You can put it on your website. And these application forms are basically powered with the data from Ilion and from EasyCollect. You can type in your ABN, it'll pre-fill everything, and your clients or your customers can fill this in a few minutes. Once they complete the form, they can come back into EasyCollect. Well, you can go back into EasyCollect and you can see all the customers and what stage they are in their form application process. And then you can go through a process as a financial controller or as an AR person, whatever your role is in the business, to then go and approve this customer. You can do your trade checks, you can do credit reports. But what in the past, what I used to do in my business was I used to only do reference checks. And as Tony and I were talking, you never get a bad reference check, right?
No, that's right. I mean, it's like applying for a job in a CV. You don't put any bad referees on your CV, do you? So the great thing about this trade payment data is get your trade reference checks if you want, but you've actually got the live data around, and actual data around how that business is paying every other business. So, the 2 references look great, but I can see 3 bills that you haven't paid on time. So it's really about making a more informed decision and up-to-date decision.
Yeah. And, fundamentally, you've got the scores, you've got the reports, you've got your trade references, you can put it all together, and then you can decide what's the credit limit, what's the terms, add your notes, and when you hit approve, it'll create the customer for you. It'll approve it, and it will even create the customer in your ERP, right? I think that's coming soon. I'm not sure if it's there yet, but that's the aim. It'll create the customer in your accounting system as well. So it's really about closing that loop. But look, I don't want to spend any more time on EasyCollect. It's just about saying how can you use the data very easily in your business today. That's kind of the takeaway from this. The data is super valuable. And if you want to run a better business, manage your late payments, manage bad debt risk, and predict which customers are going to be good and bad, then you need to find a way to access the data. And this is why we love working with Ilion. It's one of those things where we bring best of both together to kind of make it accessible for businesses. So that's it for me for Tony. Maybe do you want to maybe have a final word before we sort of close off? And there are a few questions as well that we can maybe answer right at the end.
Yeah, I mean, I think for me, and I work with a whole range of small businesses, and they're out there in market all the time. business owners are always great at the business they do. So no matter what the business I'm in, I'm normally good at that thing. What these tools and the data help you do is help you all this sort of admin side. So let's make your business more efficient. Let's get your cash flow improved so you can spend more time with your customers. So that's really what it's about. And I think, again, I can't emphasize the point enough, using up-to-date real-time information to make those decisions just makes your life a whole lot easier, particularly for businesses who rely on repeat business off their existing customer base. You know where they're at, you can stick them on monitoring, if there's been any changes. You can make that a super simple, easy process for you to sign them up again and get new cash flow on the door.
Great, Tony. That's good. So we've got just a couple of questions we'll just go through and we'll wrap it up. So we've got a question here. When Charles Realty said we're part of a government school, and we can't chase too harshly. Do you have any thoughts on how we can increase payment rates and collection rates when we can't be too full on? So maybe Tony, I'll do the first, but then you can add your thoughts onto it. So we have, as you said, we have quite a few schools who actually use the platform, right? And it's a case, you're right, like especially with parents, you've got to be kind of very considerate of how you chase them. And so with the EasyCollect platform, right, when you do your chasing reminders, I believe, and it's not just with schools, it's with anyone, there's like no need to be harsh, right? It's polite persistence pays, is like what I say. So when you automate your follow-ups, it can just be, hey, by the way, you've got this bill that's currently, overdue. So if I just show you here really quickly, when you set up your sort of reminders in the system, if you want to call it that, and I know sometimes you can only send statements once a month, but it doesn't hurt to send a reminder during the month, not to say, hey, you must pay me. You can edit your kind of statements to be your wording to be really polite, to be, hey, Mr. Hey, Bill or Sarah, this is a reminder that here is your current overdue, bills. Can you have a look at what's open? And really importantly, if you can, add a Pay Now button to all your reminders, because having a Pay Now button really helps your customers to pay you faster, right?
Yeah, 100%. I mean, who hasn't forgotten a bill and got a little reminder, which is, hey, you haven't paid your bill. Do you want to pay using credit card, last 4 digits? It's a great way to improve that and send that reminder as AJ's talking about. So don't wait to end the month, use the tools, get paid faster, nice and simple.
Yeah, I would just say to you, like I think that message of the person who cleaned your sofa, same thing. Make it easy for them to pay you. Polite persistence really helps. In terms of the actual data on individuals, so what we showed you was actually business data there. If you want to look at actually consumer data, Tony, is that something that Ilian covers as well?
Yeah, so Ilian is a consumer and commercial business. So, and we are on the consumer side, the largest collector in market. So, just like this helps with business customers, we also do the same with, the consumer example. So the example of you haven't paid your phone bill and got a reminder by SMS, that's actually generally an Ilian tool doing that for on behalf of our customers. So it's no different to the commercial space. So it's, use the tools available, use technology, use automation to speed that up as much as you can. As AJ talked about, you don't want to have the big stick to everyone because it just doesn't work, and often you can't do that, but there's no reason you can't automate those reminders to help speed up that process.
Yeah, so look, we can chat through that separately if you want to email us through the question, and we can go through that. Look, there's been some other questions about the cost of these reports, look, we can, again, if you take that offline, depending on the plan you're on, the reports vary. Some are free, some are included in your plan, some you pay for. So that's, again, in a case-by-case basis. The last question I think is for you, Tony. It's really is what's your prediction for next quarter? Do you think it's going to go up or down in terms of late payment risk?
Look, I don't think it's going to go down. I think there'll still be some slight deterioration. We did see, particularly at the sort of smaller end, while they do pay on time, there was sort of 4% up on the quarter. On average, it's sort of 2%. So I don't necessarily see we're going to see a big improvement, but when you do look at market, I know a lot of firms are having trouble in the recruitment phase. So I'm getting back to normal times. I just can't find the staff. If you're in need of things like developers, good luck trying to get a developer in market if you've got a technical solution. But it is hard for people to find the resources. So I think, look, even though it is recovering, there is a bit of lag in terms of I downsize. I'm now trying to scale up again. That's not easy. That has its own complications. So look, my prediction is next quarter, we might still see sort of 1 or 2% tick up. We're going to be watching that insolvency number very closely as well, but I don't necessarily see a big improvement over the quarter. I think as we move to next financial year, I think we're a bit more optimistic around that, but I think it'll be sort of 1 or 2% up.
No, awesome. Look, thank you, everyone. There's an offer on screen if you guys are interested. We'll get emailed to you. But really want to thank everyone for their time today. Thank you, Tony, again, and hopefully we'll see you all again next quarter for the next update. Thank you, everyone.
Thanks, everyone.